Hey everyone, it's Alan Brochstein from 420 Investor and New Cannabis Ventures, and I'm here to provide you a brief update with what happened last week and to share some of the most important news, which will be in our weekly newsletter published tomorrow. So hey, this was the best week for the cannabis sector since mid-November. The global cannabis stock index rallied 7.2%, or maybe 7.6%, and woohoo! We're still down a lot year to date, down 12.2%. So I think it's a little premature. I think what happened, well, first of all, we saw the M&A early in the week, and our market continues to really be driven as well by what's going on in the broad markets. So it probably didn't hurt that the markets ended up kind of bouncing on Friday. But when it was all said and done, global cannabis stock index rallied. And we did have some cannabis-specific news this week. I told you it was going to be a busy week. I didn't know we would see the M&A, which I'll talk more about later. I also didn't know that the House would pass the Safe Banking Act. Of course, this is the 6th time it's happened. So while it might excite people, it doesn't seem to me like this in and of itself should be much of a driver. At the same time, on Friday afternoon, Chuck Schumer finally came back to his cannabis administration, whatever it's called, silly named thing, but his plan to legalize, and he's the head of the Senate, and he sets the priorities, he said. So they're planning to introduce this legislation by April, and it was dead on arrival when they talked about it last summer. It's still dead on arrival, and I think most cannabis investors are starting to understand better that the federal thing, it'll happen eventually. It's going to take a long time, but really what's going to drive the industry in the intermediate term, short to intermediate term, is what's going on at the state and local level most likely. But hey, prove me wrong, surprise me. I just don't really count on these politicians moving very quickly. So that was some of the stuff that I think contributed to the rally this week, and we'll see if it continues. One other thing of note, a couple of weeks ago, in our weekly newsletter, we told our readers not to fear that MSOS, the ETF, had expended all of its cash. And in fact, there was another huge inflow this week, probably related to what I was just talking about. About $49 million roughly came in on Friday, and they didn't even spend it all. So that was another factor. So on these weekly newsletters, we include our most important content, and we'll usually put in all of our exclusive content as well as the most important curated press release content that we run during the week. And this week there was a lot of exclusive content and not very much curated press releases at all, especially important ones. But I'll go over those first, and then I'll come back to the exclusive news. And so, and I had told you there would be a lot of exclusive news. I was right about that. The curated press releases that we run are typically around financial reporting. We saw 2 of those this week. M&A, we saw 1 of those this week. And capital raises, we saw 1. And so let's go in with the capital raise first. Columbia Care announced a $185 million debt deal for 5 years at 9.5%. That's not as good a rate as some of the others that have been getting closer to 8%, but it's still a good rate. Personally, I was a little fearful that Columbia Care might do a convertible deal or include warrants. We knew that they were going to do a debt deal because they had recently paid a 1% fee to their existing debt holders to allow them to be able to borrow more, to change the covenant. So I thought that was good news, and it continues this theme that a lot of the leading cannabis operators have access to non-equity capital, whether it's the debt markets like Columbia Care just tapped, or sale leasebacks, or debt from some of the mortgage REITs. The other pieces of news, so on the M&A front, of course, that was the big news of the week. Verano's buying Goodness Growth. I'll talk more about that later, but it was an all-stock deal. Most of the transactions that we've seen have tended to be around public companies buying private companies, but we have seen some public deals. Last year we saw 2 companies in Florida, for example, be acquired, Liberty by Air and Bluma by Cresco. And then, of course, we saw Trulieve by Harvest. So there are some public deals, but most of these have been public-private. On the financial reporting front, Greenlane pre-announced their quarter just a little bit shy of expectations on both revenue and gross margin. They're expected to have generated about $56 million in revenue in their Q4. And then the other one of the largest companies in terms of revenue is the subsidiary of Scotts Miracle-Gro, Hawthorne Gardening. And they had already pre-announced that they expected the Q1 revenue to be down 40%. It was down 38%. Pretty rough quarter. I think I told my subscribers at 420 Investor that it would probably make a new 52-week low. And I think that what's driving it is not so much necessarily the Hawthorne part. It's hard to tell. I think there was some disappointment that the company's revenues being driven by a lot of price hikes and instead of unit volume growth in their core non-cannabis equipment business. So that was the curated press releases. On the exclusive content, we run several different types. Some of it is done around the beginning of the month, and those would be the index reviews. We did 4 of those. I'll go over those, as well as the revenue and operating income tracker. We publish that as well. So that's one type of news that we run, kind of reviewing our resources. We also run interviews, usually 2 a week. We had a cancellation. We just had 1. I'll get back to that one in just a moment. We also run we run proprietary content. Sometimes things come up and we have to run them. And this week was kind of unusual because generally we don't run that. Usually it's what I just told you. It's the interviews and reviewing our resources. And one other one that we run and we did this week, I told you I thought we'd publish the Illinois market data. It wasn't released, so that'll be next week, I presume. But each month we review the Bdsa data, and let's start there. So the Bdsa data, that's based on point of sale, and they cover 5 relatively mature markets in the West and 8 in the East, and 6 in the East, total of 11 markets. And they don't have annual data yet for Florida or Pennsylvania, so we don't necessarily write as much about that. But we've been running these for quite some time, and this has been one of the big stories, the year-over-year growth rates decelerating, going negative even in some of the Western markets after very tough comparisons. This isn't just in cannabis. We've seen this in categories like hard seltzers, or, hey, we were just talking about lawn and garden, Netflix. There's been a lot of Peloton. There's been a lot of these types of situations. Fortunately, the cannabis industry, not quite as bad, but it's been a little bit more discernible on the West Coast, these more mature markets. And so in November, which we reported last month, we saw a stabilization, which was good. All the states stopped their declines and showed some improvement. This month, it was a little bit more mixed, but I would characterize it as continued stabilization on the West Coast. But on the East, really some good news. Massachusetts surged higher to a new record. We already knew Illinois had posted very strong numbers in December as well. And they provide data as well for Florida and Pennsylvania, as I mentioned, and it's just month to month. Those 2 markets have really struggled recently. Maybe there's some seasonality in Florida, more snowbirds coming down, but the December numbers showed a big uptick, and it was the strongest month to date in Florida. Now, I think I've talked before about how the True Leaf Harvest merger put some pressure on that market. There was a lot of discounting ahead of that deal closing, not just by Harvest getting rid of their product, but others trying to compete. And then that kind of depressed some of the sales, I think. Pricing came back, but the unit volumes seem to have been maybe a little bit depressed. So for the full quarter, Florida was slightly lower in terms of revenue, according to Bdsa. Now, Pennsylvania as well has experienced some slowness, and while it wasn't a record month, it showed very strong growth, but still that market compared to Q3 was, for the quarter, down 2%. So that's the Bdsa data, the market data, and like I said, we'll have Illinois, I believe, this week. In terms of The interview that we did was with a private operator in Massachusetts, a guy by the name of Keith Cooper of Revolutionary Clinics. It was kind of interesting. This guy seems to be a very successful serial entrepreneur in other industries. He's come into this industry. I believe he's raised $50 million. On top of that, I believe, is a New Lake Capital sale leaseback. He doesn't yet have any stores, adult use stores open in Massachusetts, but he's wholesaling into the adult use market, and he has his medical stores. So I thought the most interesting part of the story was not only what he's been doing, but he's embarking on a strategy to expand into other states. And I think this is a good reminder that the cannabis industry will continue to evolve. And like I said years ago about Canada, the winners are not yet known for sure. And I think we know who a lot of the winners will be in the United States, but there's room for a lot more. And I don't know if this guy will succeed or not, but it was interesting to hear his approach. That was on the interviews. Now, reviewing all of our indices, so there was a lot of variance between the different parts of the market. So starting with the global cannabis stock index, it declined for the 11th straight month. Yes, this week will mark the 1-year anniversary of the peak. And not just in the global cannabis index, but in others as well. And so in that article, we highlighted, the stocks that performed the best and the worst, and you can see that. The global cannabis index was down double digit, but some parts of the market did better than others. And the best part of the market was the American Cannabis Operators Index, down about 7% and change. And in that article, we detail who the actually, you can see the performance of all the constituents, but we also detail the strongest and weakest performers. And I find it kind of interesting that part of the market is showing some relative strength. It's hard to call it strength when it's going down, but it is literally relative strength. It's relatively strong, not absolutely. And by the way, that index is down just 1.5% year to date now after the rally this week. And then the weakest was the ancillary index. Wow, it had its clock clean, down 16.5%. So again, we shared the returns for each of those constituents, as well as highlighted the companies that had the strongest and weakest performance. And finally, the Canadian market is quietly outperforming the broader market. It was down 9.5% in January, and this is despite some of the larger Canadian names performing quite poorly. So some of the smaller companies are doing better is what that means. That index has really been pared down. There are only 24 members now, I believe, and about almost half of those, maybe about half of them, are in what we call Tier 3, and that was the strongest part of the market. So those were the indices. We also publish once a month during earnings season, maybe twice a month, a review of our revenue and operating income tracker, which is a unique proprietary feature at New Cannabis Ventures, where we try to help our readers out by filling them in on which public companies are the leading generators of revenue and are they profitable or not. And so like it has not been very active, but there were some reports mainly out of Canada, Organigram and Tilray, High Tide, and we updated for those. And we also previewed some of the upcoming reports, including Canopy Growth. Spoiler alert. And then also starting in early March, I just wanted to get this out there, Curaleaf, and at the time that we wrote this, Curaleaf and GTI had set dates early in March. So we put previews out for those. The expectations are pretty modest, by the way, in terms of sequential growth. And that kind of fits with what's been going on with the overall market. Other MSOs will get out in the next one when we run it at the end of February. So you will have, that's one of the things we like to do to get those consensus outlooks out there for our readers. In terms of other proprietary content that we ran, I'm just double checking to make sure I'm not missing anything. So it's kind of rare that we run like exclusive content of this nature. We do when we need to. One of them was about innovative industrial properties. We did publish a press release during the week. It would not have been included in the newsletter because they didn't price the deal. But innovative industrial properties was out there discussing a $300 million 5-year debt raise. After the close on Friday, no press release. They issued an 8K saying that due to market conditions, they're walking away from that And so they pulled the deal. And this is a slight negative for the market because this capital gets redeployed into MSO CapEx, right? So that's not to say that there won't be any. And we've seen a lot of companies go public recently, Chicago Atlantic, and before that AFC Gamma. There's in New Lake Capital. So there's a lot of providers of this capital. But just something to take note of, that for whatever reason, IIPR was not able to accomplish what they had set out to do in terms of raising that capital, which would have been redeployed into the industry. And then the other piece, and I'm not exactly sure what to make of it, and it wasn't exactly a complete surprise. So in Pennsylvania, they had kind of startled market participants by requesting in the fourth quarter information about vape products. They wanted to know all the ingredients. And so and if you didn't provide it, your products would be pulled. So the processors there provided the ingredients, and the result was just horrendous. The Department of Health of Pennsylvania has made what's probably just a horrendous error, and they have pulled a whole bunch of products off the market due to the presence of additives that aren't approved by the FDA. In plain English, what I think is going on is that people are adding certain things like terpenes that enhance the flavor profile, but literally are not approved additives by the FDA. It's kind of weird. The FDA doesn't regulate cannabis. It's kind of weird. There were no complaints or health issues raised or anything, yet the regulators in Pennsylvania took it upon themselves to do this. So two of the companies that were had the most SKUs included in this 18-page list were Curaleaf and Trulieve. We reached out to Kim Rivers, who shared some great insight. She pointed out a couple of things. Number one, that a lot of the products that, at least her products, aren't on the market anymore. You have to provide this information for all the products that you've sold. So not every one of these products is on the market now. And also, she said what it doesn't show is the number of products you have that are on the market that aren't part of the recall. So when it's all said and done, I think this is going to be a potential problem. I've noticed over time, things like this don't get a lot of attention at first, and then they do. So I'm a little bit nervous, to be honest. I don't think this will be a long-term problem for the industry. I certainly hope that the operators in the state and I think they have an industry association, are able to rectify the situation. A lot of patients have now been alarmed, in my opinion, probably unnecessarily, and this is a problem that will go away. It's a question of how quickly, because it's not like all vape pens have been pulled. It's only certain types, and so it'll just take a while for the market to reconfigure. But that was the other piece that we ran. So finally, each week we try to share a little bit of insight and perspective. And this week we talked about the Verano Goodness Growth deal. And it's part of a larger theme that we've been discussing now for several years about consolidation. And we have viewed, and we continue to view, consolidation as one of the big themes in the cannabis industry. And in this piece, we kind of talked about some of the challenges and also, why it's a good thing, why it benefits both the investors in the acquiring companies as well as obviously the ones that get acquired. Now, to be fair, we are not saying that there's going to be a ton of public company takeouts, but we did suggest if that's going to happen, it could be more focused in California and Canada than in other domains. So we've seen a lot of M&A. It tends to be either going deeper within an existing state or entering a new state. It's not really these large companies coming together to achieve synergies or the kinds of things you might see in other industries. Since we operate in a state-by-state industry, and it's all about these individual state businesses. So Verano was very consistent with what they've been saying. They just did that deal in Connecticut. Now they're getting into New York and also Minnesota. I've talked to my subscribers at 420 Investor for a very long time about how unique these goodness growth assets are, to be one of 2 in Minnesota and one of 10 in New York. So the 10 licenses in New York, I don't think people, I guess Medman knows now, I don't think people realize how valuable these licenses are due to the way that they're going to be treated under the new adult use regime. If you're not familiar with that, new applicants into the market can either come in as a cultivator or processor or as a retailer. If they choose to come in as a retailer, they can only have one store. The existing 10 operators, including Goodness Growth, which will now be part of Verano, they can have 3 adult use stores and be vertically integrated. They can have, and they have a running head start on that. So they should do very well over time. We still don't know what the caps are going to be on the canopies there. And they're also allowed to have 5 other medical stores. I don't think that's so valuable. But the main point is Verano, in our opinion, got a fair price, not necessarily the best price. It was a competitive auction, but a fair price on good assets that fit with its strategy. And the bigger takeaway is kind of, expect more M&A in our industry. So with that, I'm going to wrap up. I'm sorry this is a little bit longer than normal. I like to keep these at 15 minutes or less, but wow, it was a busy week. And anyway, after the market goes up 7.6%, even though we're still down 12.2% year to date, I bet more people are interested in tuning in and hearing what I have to say. So maybe it was worth it to spend the extra time. So with that, have a great week, everybody. Take care.